The first time I realized the CEO's son was stealing from us, it wasn't a dramatic moment. It was the sound of a printer in the hallway choking on a stack of invoices at 6:12 a.m. and the smell of burnt coffee in a break room that hadn't seen joy since 2019, while a line item on my screen blinked like a polite alarm. Model training. External compute. $184,900. I remember thinking very calmly, that's not innovation. That's a mortgage. My name is Mara Ellison. I'm 44. For 12 years, I was senior accounting manager at Kestrel Ridge Health Systems, a privately held healthcare services company based in Austin, Texas. 3 buildings, a too shiny lobby, and exactly the kind of organization that tells employees they're a family right before they ask you to work Saturday. I didn't work in the fun part of healthcare. No scrubs. No life or death heroics. I worked in the part where money either obeys rules or destroys you. And for 12 years, money mostly obeyed because I made it. I led a consolidation overhaul that reduced our monthly close from 14 business days to 6. I built the Hawkeye Spend Monitor, a dashboard that flagged vendor anomalies across 3,800 monthly invoices with a false positive rate under 2%. I renegotiated contract terms with our top 3 billing vendors and cut processing fees by $1.46 million annually without impacting service levels, which is corporate for nobody screamed. I also ran point on our internal audit remediation after a CMS compliance scare, and we passed our follow-up review with a 96% score. Not because we got lucky. Because I am aggressive about documentation in the way some people are aggressive about CrossFit. The personal cost was predictable. I hadn't taken a full weekend off in 28 months. I missed my sister's wedding brunch because our CFO decided the board deck needed one more sensitivity analysis the morning of the flight. I kept a spare blazer in my car because sometimes you go from a grocery store parking lot to a surprise, urgent meeting without enough time to be a person. I'm quiet, detail-oriented, observant, which is a polite way of saying, if you hand me chaos and call it strategy, I will eventually find the receipt. The CEO was Daniel Wexler, late 50s, charismatic, the kind of man who could say synergy with enough conviction that people would applaud. Kestrel Ridge was his kingdom. His office had a glass wall, a leather chair that looked unused, and framed photos of him shaking hands with governors like he was personally responsible for roads. His son, however, was the actual problem. Grayson Wexler, 32, head of innovation. That title appeared overnight, like mold. Grayson had the look of someone who'd always been told he was brilliant and had never been forced to prove it. Expensive sneakers with scuffed toes. A watch that cost more than my first car. Hair that looked intentionally messy, the way people do it when they want you to confuse effort with talent. He wore slim-fit suits that strained at the shoulders and made him look like a teenager playing dress-up in a men's department. He laughed too loud at his own jokes and mispronounced basic accounting terms like he was doing a podcast. The first time we met, he said, "I'm going to help you guys optimize the burn and streamline the spend velocity." Spend velocity. I nodded once because I'm not paid to correct vocabulary. I'm paid to make sure it doesn't become a felony. Grayson's innovation budget was announced at an all-hands in January, $3.5 million earmarked for AI transformation. He stood on stage in the Kestrel Auditorium, under lights that made everyone sweat, and talked about machine learning like he'd personally invented math. "We're going to build proprietary clinical intelligence," he said, pacing like a motivational speaker. "We're going to disrupt the care continuum." The care continuum, for context, was a phrase he learned sometime that week. He used it 9 times. Behind me, my colleague Lila Chen, accounting analyst, 29, sharp as a blade and twice as quiet, leaned toward my ear and whispered, "If he says blockchain, I'm leaving." "He won't," I murmured. "He's not brave." She exhaled a laugh, small and tired. The first red flag wasn't the budget itself. Budgets can be real. The first red flag was the vendors. In February, invoices started hitting AP from companies no one in procurement had on board. Neuron Foundry Labs, Vector Harbor Compute, Saffron Road Consulting LLC, Names that sounded like someone trying to make a startup generator cry. I opened one invoice and stared. No purchase order. No statement of work. No deliverables. Just AI development services and a number that made my eyebrow lift. $92,400. I sent a message to procurement, Sam Ortega, director of procurement, the kind of man who replied in complete sentences and never used exclamation points. Sam, do we have an approved vendor file for Neuron Foundry Labs? Sam replied 2 minutes later, no. Who's requesting payment? I already knew. I typed innovation. Sam answered, of course. By March, the pattern was so clean it felt deliberate. Invoices arriving just under approval thresholds. Split charges across departments. Cloud credits billed through a marketing vendor. Research stipends paid to an LLC with a P.O. box address. And the number that kept reappearing, like a signature, $184,900. Always external compute. Always urgent. Always approved by Grayson. On April 9th at 7:03 p.m., I stayed late to reconcile our innovation spend before the quarterly board packet went out. The office was quiet in that sterile way offices get after 6 p.m., lights too bright, air too cold, everyone gone except the people who don't get to leave. I pulled the general ledger detail, filtered by cost center, and began doing what I always do when something doesn't smell right. I followed the money. Neuron Foundry's payments weren't going to a standard business account. They were going to a fintech platform that pooled funds before dispersing them. Vector Harbor Compute was reselling cloud services, but the underlying receipts showed billing in the name of an entity called G. Wexler Holdings. Not Kestrel Ridge. Not our subsidiaries. His. I sat there, staring at that line, and felt a strange kind of calm. Not shock. Not anger. The feeling you get when the puzzle piece finally clicks into place and you realize you're not crazy. Everyone else is just not looking. The next morning, Daniel Wexler's executive assistant sent me a calendar invite. Subject, Quick Sync Innovation Spend. Location, Glasshouse Conference Room, 18th floor. Glasshouse was where they held meetings when they wanted you to understand that the people inside the room had power and the people outside didn't. I walked in at 10 a.m. sharp. The room smelled like expensive cologne and new carpet. Floor-to-ceiling windows. A long table with a single carafe of water like hydration was a privilege. Daniel sat at the head. Grayson sat 2 seats down, legs crossed, laptop open, tapping at his trackpad like he was doing something important. Our CFO, Brent Klein, sat beside Daniel with a folder in front of him and the expression of a man who prayed problems would solve themselves. Daniel smiled at me. Mara, appreciate you making time. Of course, I said. Grayson grinned too wide. Yeah, Mara's like the numbers ninja. Numbers ninja. I watched Brent's jaw tighten almost imperceptibly. Daniel gestured. We just wanted to make sure we're aligned on innovation spend. Grayson's doing incredible work. The board is excited. Grayson leaned back, hands behind his head, and said, we're basically building an AI layer that's gonna, automate clinical decisioning and also optimize the revenue funnel. Clinical decisioning. Revenue funnel. Both wrong. Both said confidently. I opened my folder. I didn't bring my laptop. Laptops invite arguments. Paper is harder to gaslight. I reviewed the Innovation Cost Center, I said, calm. There are $2,013,600 in expenditures since January 1st. Grayson waved a hand. That's normal. Compute is expensive. You have to spend money to, train the thing. The thing, I repeated softly. Brent cleared his throat. Mara, can you summarize your concerns? Yes, I said. I slid one page across the table, then another. Each one labeled. Highlighted. Dated. Neuron Foundry Labs has been paid $611,800, I said. They have no approved vendor file, no PO, and no statement of work. Grayson's grin faltered. They're agile. We didn't want procurement friction. Vector Harbor Compute has been paid $739,600, I continued. Underlying receipts show billing in the name of G. Wexler Holdings. Grayson blinked once, slow. That's just how the cloud works. It's like nested accounts. Daniel frowned, looking between us. Grayson. Grayson laughed, a little too loud. Dad, it's fine. She's very process-oriented. She doesn't always get innovation. I turned to Daniel, still calm. It's not about process. It's about ownership. Grayson's voice sharpened. We own the innovation. It's under my budget. You don't, I said. Silence. Brent shifted in his chair. The air felt suddenly colder. Grayson leaned forward, face flushing. Excuse me. I traced the payments, I said. Company funds are paying for compute and contractor work tied to an entity registered under your name. If there's a legitimate reason, I'm happy to document it for the board. But right now it reads like misappropriation. Daniel's smile disappeared. Grayson. What is she talking about? Grayson's hands moved in a quick, useless gesture. It's not, Dad. It's like, this is a side sandbox. It's a personal project, yeah, but it's also aligned. It's basically an incubator. We're leveraging Kestrel resources to create optionality. Optionality. He said it like it was a spell. Brent's voice was quiet. Dangerous. Grayson, did you set up a separate company? Grayson scoffed, trying to recover. It's not separate. It's a future subsidiary. Like a spin-out. It's how startups scale. Everyone does this. I watched Daniel's face tighten, the muscles along his jaw working. He looked less like a CEO and more like a father realizing his son had just burned down a house and called it renovation. I let the silence stretch, because silence is where people hear themselves. Then I slid the final page across the table. A bank confirmation. A payment trail. Dates. Amounts. At the bottom, in clean black text, total paid to G, Wexler Holdings linked accounts, $1,987,400. Grayson stared at it, blinking rapidly. Daniel's voice came out flat. Mara. Who else has seen this? No one, I said. Yet? Brent looked at me, eyes sharp. Why? Because I wanted to be precise, I said. And because I assumed you'd want the chance to handle it quietly before it became public. Grayson's voice cracked, rising. This is ridiculous. She's making it sound criminal. It's innovation. Daniel held up a hand. Grayson. Stop. Grayson turned, panicked now, words tumbling. Dad, I can fix it. I can pay it back. We're so close. The model is almost. You used company funds, Daniel said slowly, each word heavy, for a personal company. Grayson's eyes flicked to me, then away, like he was trying to find an exit. This is a misunderstanding, he said quickly. She hates me. She's threatened by. I didn't react. I didn't need to. Because in that moment, the room wasn't about me. It was about the paper. The dates. The amounts. The simple truth that money leaves footprints even when people try to sprint. Daniel looked at Brent. Call Catherine. Brent nodded once. Catherine Hale, the board chair, didn't get called unless the building was already on fire. Grayson's voice went thin. Dad, please. We can talk about this. Not in front of. Daniel's gaze stayed steady. You should have talked about it before you spent $2 million. Grayson swallowed hard, then tried one last corporate line, like jargon could save him. It was a strategic investment, he said. We were streamlining the innovation pipeline. I tilted my head slightly. You're not a pipeline, I said. You're an expense. And that's the moment his confidence finally slipped. Not because I was cruel. Because the truth is heavy and he'd been carrying nothing but air. If my story resonates with you, make sure to like and subscribe. I share workplace strategy and corporate analysis every week that might just change how you navigate your career. Because what happened next, what Grayson tried when he realized I had receipts, wasn't just panic. It was proof that the people who misuse power never expect anyone to read the fine print. What Grayson didn't know was that I'd been building a case against him long before he gave me a reason to. Not because I'm dramatic. Because I'm in accounting. We don't get to be dramatic. We get to be correct. The first time he touched innovation budget, he treated it like a personal checking account with better lighting. And the thing about people who treat company money casually is that they always assume everyone else does too. They assume no one is watching the vendor master file. No one is reconciling the prepaid expense schedules. No one is comparing bank confirmation IDs to invoice metadata at 6:12 a.m. I am always watching. On January 23rd, 2025 at 5:58 p.m., I created a folder on our internal audit drive labeled Innovation, Supporting Docs, FY25. The name was boring on purpose. If you label something fraud, people get curious. If you label it Supporting Docs, people ignore it. Inside, I set up 3 subfolders: vendor onboarding, invoice backup, and bank trails. Because those are the 3 places the truth hides when someone thinks they're being clever. On February 4th, 2025, at 7:21 a.m., I pulled the vendor master export and ran my standard anomaly scan, the same one I built after the CMS scare. The scan flagged anything with a P.O. box address, a new vendor created within 72 hours of first payment, an invoice amount within 3% of an approval threshold, a bank account registered under a fintech dispersal platform, a tax ID mismatch between invoice header and ACH record. Neuron Foundry hit 4 out of 5. Vector Harbor hit all 5, which was honestly ambitious. So I did what I always do when I see a pattern. I widened the lens. On March 11th, 2025, at 8:14 p.m., after everyone went home, I reconciled innovation spend against corporate card transactions and cloud billing statements. Grayson had approved external compute, but the underlying cloud receipts were billed to an entity called G. Wexler Holdings. That wasn't an accounting nuance. That was a headline. I didn't confront him. Confrontations are for people who want catharsis. I wanted documentation. So I started a quiet chain of custody process. Every time I saved a file, I wrote down the timestamp. Every time I exported a report, I logged the query parameters. I generated PDF snapshots of the ledger details and locked them in read-only format. On April 2nd, 2025, at 6:36 a.m., I emailed Brent Klein a one-line note: Innovation spend reconciliations prepared. Can review if needed. He replied, thanks. He didn't ask for them. He didn't want to know. That's fine. A lot of people prefer plausible deniability right up until they don't. And the final layer, the one Grayson truly never saw coming, was board protocol. 3 years earlier, after our CMS remediation, the board approved Clause 12C in our internal controls policy. Any suspected misappropriation over $250,000 required immediate notification to the audit committee chair, documented in writing, within 24 hours of confirmation. Not discovery. Confirmation. So on April 10th, 2025, at 11:46 a.m., while Grayson was still trying to convince his father that nested accounts were a thing, I had already drafted the notification email to Catherine Hale. Subject line: Clause 12C notification. Innovation spend irregularities. Body, short. Factual. Attached, everything. I didn't send it yet. Not because I was hesitating. Because I wanted the meeting to end first. People say keep receipts like it's a metaphor. For me, it's literally a folder. They never saw it coming because they didn't believe anyone would bother to be thorough when there was no applause for it. 2 days later, the first real consequence arrived, as consequences often do, in the form of someone else's panic. At 8:09 a.m. Saturday, my phone buzzed with a calendar invite from Brent. No explanation. Just urgent sync. Brent didn't schedule weekend calls unless something was already burning. I joined. Video off. Coffee in hand. Calm. Brent's face looked gray and tight, like he'd been grinding his teeth all night. Behind him, I could see the corner of his office and the reflection of a monitor, open spreadsheet, of course. Even in crisis, we cling to the familiar. Mara, he said quickly, we have a situation. I waited. Daniel wants this. Contained, Brent continued. Grayson says it's a misunderstanding. He says the expenses were pre-approved and the entity structure is normal for innovation work streams. Innovation work streams. Brent sounded like he'd swallowed Grayson's vocabulary and was regretting it. What does legal say? I asked. Brent blinked. Legal hasn't been looped. Of course they hadn't. And AP? I asked. They're pausing payments, Brent said. For now. But there are $412,700 in invoices queued for Monday. Vendors are already emailing. And IT flagged that one of the compute accounts is tied to a domain outside our corporate environment. I let that sit for a moment. You want me to do what? I asked. Brent's eyes flicked away. Daniel wants you to reclassify some of the charges. Make the reporting cleaner before the board packet goes out. Reclassify. Cleaner. The euphemisms always show up right before the ethical breach. No, I said. Brent stared at me. Mara, I'm not moving money to make someone feel better, I said. Calm. Final. Brent swallowed. Okay. Then Daniel asked if you could at least provide a summary that frames this as exploratory R&D. I already have a summary, I said. It frames it as misappropriation. Brent winced like I'd used a swear word. At 9:02 a.m., Grayson texted me. Not called. Texted. Because texts feel casual, and casual is how people try to minimize wrongdoing. Hey Mara, quick cue. Can you help us align the innovation ledger so it reflects the strategic intent? The board's gonna see raw numbers and freak. Appreciate you keeping it high level. Strategic intent. I replied with 2 words, decline. Documented. A minute later, he sent another. LOL, okay, but like, we're on the same team. Don't get lost in the weeds. We're building value here. I didn't respond. I saved screenshots. Time, date, contact number. Because the additional layer of planning wasn't just the audit folder. It was my personal rule. If someone asks you to do something improper in writing, you never correct them. You let them continue. By the end of that day, I had 3 new artifacts: Brent's request, Grayson's texts, and the IT note about external domain linkage. All neatly placed in innovation, supporting docs, FY25. By the end of the week, the technical failure finally surfaced, not in the AI model, but in the part of the system that actually keeps companies alive. Payments. On Thursday at 3:38 p.m., our bank flagged 3 outbound transfers totaling $298,400 as potentially unauthorized third-party disbursements. The transfers were intended for Vector Harbor Compute, but the beneficiary details didn't match the vendor record. Our bank did what banks do when they smell risk. They froze the entire batch. Payroll wasn't frozen. Not yet. But vendor payments were, and vendors are how hospitals get supplies and how clinics keep lights on. Sam Ortega from procurement called me at 3:51 p.m. Mara, he said, voice low, I'm getting vendor escalation emails. People are mad. I know, I said. Tell me you're already on it, he said, not as a command, more like a prayer. I'm on the truth, I said. Sam sighed. You're terrifying. I'm consistent, I corrected. At 4:07 p.m., Lila Chin pinged me on Teams. Innovation budget just broke AP. I'm watching Brent sweat through his shirt from 2 desks away. Hydration is important, I typed back. At 5:22 p.m., Daniel Wexler finally called me himself. Not through Brent. Not through Grayson. Himself. His voice was controlled, but there was a tightness to it, like he was trying to speak as a CEO while thinking as a father. Mara, he said, I understand you've raised concerns. Yes, I said. I need to know how serious this is, he continued. Grayson says the work is aligned with company objectives. Aligned isn't owned, I said. Daniel exhaled. We can sort out ownership later. Right now we need operations stable. Vendors are threatening to halt services. This is becoming a cash issue, I finished. Silence. Yes, Daniel admitted. I can't fix this by moving entries, I said. You fix it by stopping payments to personal entities and notifying the audit committee. Daniel's voice hardened slightly. That would be extreme. It's policy, I said. Clause 12C. Another silence. Longer. The kind where someone is realizing a document they never read can still govern them. Daniel's voice came quieter. Grayson didn't tell me that clause existed. I didn't put it in for decoration, I said. By then, the incompetence was becoming visible. Not just to me. To the bank, to vendors, to procurement, to the CFO, and soon, inevitably, to the board. Grayson called at 7:16 p.m., voice higher than before, trying to sound relaxed. Hey Mara, so, slight situation, he said, laughing softly like it was a quirky hiccup. The bank is being legacy. They're not used to innovation flow. If you could just hop in and help us streamline the narrative so we can unfreeze the batch. Stop, I said. He froze mid-sentence. What? Stop using company funds for personal accounts, I said. Stop asking me to cover it. His voice tightened. Mara, you're making this adversarial. I'm making it accurate, I replied. At 7:19 p.m., I hit send on the email to Catherine Hale. Clause 12C didn't care about Grayson's feelings. 2 weeks in, the relational shift began, and it hit Grayson where he actually lived, in his reputation. The board scheduled a special audit committee meeting for Monday morning. Catherine requested all supporting documentation. I gave her everything. Clean. Indexed. Timestamped. A table of contents with hyperlinks. Meanwhile, Daniel's assistant tried to schedule me for a pre-brief with Daniel and Grayson. I declined. Then the client side started noticing. Not because they cared about AI innovation, because they cared about vendor stability. A major pharmacy network client, Brightwell RX, $9.6 million annually, requested a payment assurance letter after hearing rumors of internal finance disruption. Their vendor risk team had flagged us. They don't flag you unless they're already thinking about alternatives. Brent texted me at 6:02 a.m. on Monday. Board meeting today. Please be available. I replied, available. At 9:34 a.m., Grayson called me again. This time, no jargon. Just a strained, thin voice. Mara, he said, I need you to help me. With what? I asked. I didn't mean he started, then stopped, breath catching. They're acting like I stole it. It was for the company. It was. It was in your entity, I said. He went silent, then rushed out, okay, but I can fix it. I can pay it back. I can transfer the IP. Whatever. I just need you to tell Catherine this wasn't malicious. There it was. The desperate offer. Not money. Not title. A plea for narrative control. I can't, I said. Why? He snapped, then immediately softened, voice breaking. Mara, please. Daniel, my dad, this is going to ruin me. I stared at my desk. At the neat stack of binders I'd printed for the audit committee. At the calm inevitability of numbers. It's already written, I said. What do you want? He whispered. I didn't answer the way he expected. I want you to stop asking people to lie for you, I said. He made a small, choked sound. I'm not. You are, I said, still calm. And you're doing it in writing, which is bold. That afternoon, I got calls from 3 people. Sam Ortega, if the board asks, I'll back you. Procurement never approved those vendors. Lila Chin, I'm proud of you. Also, please tell me you're backing up your files somewhere safe. Brent Klein, Mara, be careful. Daniel is emotional. Daniel being emotional was not the risk. Daniel being protective was. 2 weeks in, the legal layer finally sharpened into something real. Catherine Hale's counsel informed Daniel that if the board didn't act promptly, they could be exposed to breach of fiduciary duty claims for allowing continued misappropriation after notice. That's the kind of sentence that makes executives stop bargaining. At 6:41 p.m. Thursday, Daniel's assistant sent out an internal memo, innovation budget spending paused pending audit review. The word paused did a lot of work there, like a towel over a flood. On Friday morning, Brightwell RX issued a formal notice. Unless Kestrel Ridge provided assurance of financial controls within 10 business days, they would begin transitioning to a competitor. Their procurement team estimated transition cost at $1.2 million. They were willing to spend it to avoid uncertainty. Grayson called me at 9:09 p.m. that night. His voice sounded like someone speaking through clenched teeth and panic. I'll give you anything, he said. A promotion. CFO track. A bonus. $100,000. Just tell them you don't think it was theft. You can't bonus your way out of a ledger, I said. He inhaled sharply. Mara, I'm begging you. I could hear it now. Real desperation. No jargon to hide behind. Just a man discovering that money leaves fingerprints. I'm not your shield, I said. I'm your record. Before I tell you what happened next, you might be wondering something very specific. Why didn't I take the quiet option? Why didn't I let Daniel handle this as a family, accept a promotion, and pretend the numbers were just Flexible? That's exactly what I'll cover in next week's video, so make sure you're subscribed. 3 weeks in, the situation stopped being an internal issue and started being what it always becomes when money goes missing inside a healthcare company, a multi-front problem with other people's deadlines attached to it. The first front was operational. Our vendor freeze didn't just irritate a few consultants with LinkedIn pages and vague job titles. It hit real vendors with real services, claims processing, call center overflow, clinical coding support. The kind of vendors that keep patient services moving while executives give speeches about care outcomes. At 7:18 a.m. on a Tuesday, Sam Ortega forwarded me an email chain from a claims clearinghouse partner. Subject: Final notice, service suspension. They gave us 48 hours to catch up on a past due balance of $156,200, or they would suspend transaction processing. A suspension would mean delayed claims. Delayed claims would mean delayed reimbursements. Delayed reimbursements would mean cash flow issues. Cash flow issues would mean meetings where men with perfect hair ask you to get creative. I read it once, then looked at the quiet, neat stack of documents on my desk and thought, this is why I don't like creative. The second front was client-facing. Brightwell RX didn't wait 10 business days. Their vendor risk team escalated the moment they heard bank-flagged, unauthorized third-party disbursements. They requested an emergency controls attestation letter by end-of-day Friday. Not next week. Friday. Their email included a sentence that landed like a paper cut. We are exploring contingency vendors. Exploring is what people call leaving before they admit it. The third front was regulatory. One of the vendors Grayson had used, Saffron Road Consulting LLC, had billed expenses coded as clinical model training, but the work papers attached to the invoice reference patient data extracts. We have patient data. We treat it like nuclear material. It does not casually leave the building under the label Innovation Flow. At 10:03 a.m. that same Tuesday, our compliance officer, Nadia Patel, called me. Nadia was the kind of person who spoke softly because she didn't need volume to be taken seriously. Mara, she said, I'm seeing invoices with language that suggests PHI may have been accessed by unvetted contractors. Which invoices? I asked. She named them. I already knew. Nadia exhaled. If PHI left our environment without proper BAAs and access logs, we have reporting obligations. And I don't mean internal. Understood, I said. On the other end of the line, I heard her keyboard clicking faster. That was Nadia's version of screaming. By Wednesday, the cumulative exposure had a number attached to it, because eventually, everything does. Brent's team calculated. $298,400 in blocked outbound transfers still in limbo. $412,700 in queued vendor invoices now overdue. $156,200 in clearinghouse balance at risk of suspension. $9,600,000 annual Brightwell RX revenue at immediate risk. $1,840,000 in innovation spend that could not be substantiated by deliverables. $220,000 projected legal fees for external counsel if the audit committee escalated to an independent investigation. Total immediate financial impact, $12,527,700. That's before you count the cost of panic, which is always higher than the spreadsheet admits. And then Grayson decided to make it personal. He called at 6:41 p.m. Thursday. I was at my kitchen table with my laptop closed, my dinner untouched, staring at a window that reflected my own face in a way that made me look older than 44. His voice came sharp and rehearsed, like he'd practiced with someone. Mara, he said, I'm going to be very clear. You're overstepping. You're not legal. You're not compliance. You're an accounting manager. Senior, I corrected, mostly out of habit. He ignored it. If you keep pushing this narrative, I'll have legal review whether you violated confidentiality by disseminating internal financial data to board members. I blinked slowly. Not because I was shocked. Because I was impressed by the audacity of someone threatening me for doing my job. You mean Catherine? I asked. Don't play dumb, he snapped. You sent her materials. You went around leadership. That's insubordination. There it was. The attempt to turn policy into rebellion. I followed Clause 12C, I said. You can read it. It's short. He laughed, brittle. Clause 12C isn't a law. It's a guideline. Policies are how companies avoid laws, I said. You might want to treat them with respect. His breathing got louder. You're trying to ruin me. I'm trying to record you, I said. There's a difference. Then, because he couldn't help himself, he added the part that told me he still didn't understand how evidence works. I'll sue you for damages, he said. For the business disruption. For reputational harm. You're costing us clients. I looked down at my phone at the call timer ticking upward. Grayson, I said softly, you can't claim damages for consequences you caused with your own spending. That's not a lawsuit. That's a confession. Silence. A beat. Then his voice cracked into something less controlled. You're a bitter accountant, he hissed. You think you're smarter than everyone. I considered that. I think I'm more careful, I said. And right now, that's enough. He hung up. That night, I did something he never anticipated. I opened my preparation folder and created one more subfolder. Audio notes. Because threats are best stored in their natural habitat. By Friday morning, the wider organization finally realized the scope of the problem. Not the executives. The people who actually ran the place. Procurement started rejecting innovation invoices en masse. IT quietly revoked access to the external compute accounts once they traced the domain registration to a personal email tied to Grayson. The ticket log noted, security risk, non-corporate asset. Compliance drafted a preliminary incident assessment for potential unauthorized PHI exposure. Nadia didn't use dramatic language. She didn't have to. The phrase reportable event does all the work. And in finance, Lila Chen sent me a message that was pure Lila. He's trying to blame you for physics. I typed back. Physics is notoriously unforgiving. By week 5, it stopped being a storm and became a tribunal. The board didn't hold a meeting. They held what can only be described as an intervention with legal counsel. Monday, 8 a.m., Glasshouse conference room. Same windows. Same table. Different energy. Catherine Hale sat at the head this time, not Daniel. Catherine had gray hair cut clean at the jaw and the kind of expression that told you she did not do surprise crises. She did prevention. And when prevention failed, she did consequences. Daniel sat beside her, smaller than he'd looked in January. Brent sat across from me, face tight. Nadia was there. Sam was there. Our outside counsel was there, Rebecca Lynn, who smiled politely like she'd already billed us 3 hours for showing up. Grayson arrived 8 minutes late. He walked in like he was still in charge of something, then paused when he saw who was in the room. His swagger stuttered. Hey, he started, then forced a grin. Big crowd. Love the cross-functional alignment. Catherine didn't smile. Sit, she said. He sat. Catherine looked at me. Mara, summarize. I didn't look at Grayson. I didn't need to. I spoke to the room. Between January 1st and April 15th, 2025, $2,013,600 was spent under the Innovation Cost Center, I said. Of that, $1,987,400 is traceable to vendor payments with beneficiary ties to G, Wexler Holdings, or to accounts billed under that entity's name. Vendor onboarding was bypassed. Purchase orders were not created. Deliverables were not documented. Bank transfers were flagged. Compliance has concerns about potential PHI exposure. Grayson lifted his hands as if he could physically push the words away. Okay, that's one interpretation. Rebecca Lynn spoke for the first time, voice calm and precise. It's not an interpretation. It's traceable. Grayson's eyes darted to his father. Daniel's face was fixed, jaw clenched. Catherine turned her gaze to Grayson. Explain why company funds were used for an entity under your ownership. Grayson's voice went fast. Too fast. It's a pilot, he said. It's a sandbox. It's like an incubator. Everyone does this. We were building optionality. We were creating value. The IP would come back to Kestrel Ridge, obviously. I mean, it's my dad's company. Catherine's eyebrow lifted slightly at that last line. Not anger. Just the cold acknowledgement of entitlement. Rebecca Lynn slid a document across the table toward Grayson. Then you won't have an issue signing an acknowledgement that these funds were misappropriated and agreeing to immediate repayment. Grayson stared at it as if it were written in another language. You're making it sound like theft, he said, voice rising. It wasn't theft. It was innovation funding. Catherine leaned forward. Her tone didn't change. That was the scary part. Grayson, she said, when money leaves a company account and goes to an entity you control without authorization, that is theft. The only debate is whether we call it theft privately or in front of regulators. The room went very still. Grayson swallowed hard. Dad. Daniel's voice came out hoarse. Grayson. Stop. Grayson's eyes went wet. He blinked rapidly, trying to hold himself together, and then he did what people do when they realize the story is over. He tried to bargain with me. Mara, he said suddenly, turning toward me like I was the lever. Tell them I didn't mean it. Tell them this wasn't malicious. You can have what you want. I'll put you on the CFO track. I'll give you equity. I'll give you $250,000. Just please. He said it all in one breath, like money was a fire extinguisher. Catherine watched him, expression unreadable. Brent looked like he might pass out. I looked at Grayson. Calm. Almost gentle. I don't want your money, I said. I want the company to stop bleeding. His face contorted. You're doing this to me. I'm not, I said. I'm doing this to the ledger. That's when I made my decision, and it didn't feel dramatic. It felt inevitable. Because the board didn't just need a villain. They needed a professional adult who could rebuild trust, rebuild controls, and keep the company from stepping into a regulatory hole wearing tap shoes. Catherine turned to me again. Mara, we need stability. We need someone the bank will believe. Someone Brightwell will believe. Someone compliance will trust. I waited. We're placing Brent on administrative leave pending review, Catherine said. Brent's face went pale. Daniel will recuse himself from audit matters related to this incident. And we need an interim CFO. There it was. I didn't smile. I didn't celebrate. I just felt the quiet satisfaction of watching competence become scarce enough to be valued. I'll do it, I said. With conditions. Catherine nodded once. Name them. Full authority over finance, AP, and vendor controls, I said. Direct reporting line to the audit committee for 6 months. And a written mandate that no executive, including Daniel, can override control policies without board approval. Grayson made a strangled noise. This is insane. Catherine didn't look at him. Agreed. And I added, I want the repayment agreement signed today. Grayson's head snapped toward me. You can't. I can, I said, quietly. Because you already admitted it was your entity. The following Monday, within 48 hours of that board meeting, the collapse finally happened in full daylight. Brightwell RX issued a formal notice of intent to terminate unless we provided a signed controls attestation, a third-party audit engagement letter, and proof of leadership change within 5 business days. 5. Not 10. Not, let's circle back. 5. Our clearinghouse partner suspended services for 12 hours while they waited for payment confirmation, and that 12 hours created a backlog of 18,400 claims. We projected delayed reimbursements of $3,260,000. The bank demanded a new signatory structure and increased oversight. Translation: they didn't trust us. And then the most predictable thing happened. Grayson attempted sabotage. Not dramatic sabotage. Cowardly sabotage. At 9:17 p.m. Tuesday, IT alerted us that someone tried to download a bulk export of our general ledger and vendor master file to an external drive. The attempt was made using Grayson's credentials. Security stopped it, logged it, saved the footage. The next morning, Rebecca Lynn walked into my temporary CFO office, still smelling like someone else's cologne, and placed a printed incident report on my desk. Attempted data exfiltration, she said. It's not subtle. It rarely is, I replied. At 11:05 a.m., Catherine called an emergency board session. Daniel was present. Grayson was not, because Rebecca had advised that Grayson should not be in meetings where legal exposure was being discussed, which is a polite way of saying, keep him away from microphones. Catherine put him on speaker anyway, because Catherine enjoyed clarity. Grayson answered on the third ring, voice jittery. Hello. Grayson, Catherine said. We have evidence you attempted to export confidential financial data externally last night. What? No. That's impossible, he stammered. I was just backing up stuff for continuity. I'm literally trying to help. Rebecca's voice cut in, calm as a scalpel. Continuity doesn't require an external drive. Grayson's breathing went loud in the speaker. Then he broke. Okay, fine, he blurted. I panicked. I didn't know what you were going to do. I needed protection. You people are trying to destroy me. Catherine's tone stayed level. You destroyed you. Grayson's voice rose into something ugly. This is because of Mara. She's doing this. She's got a vendetta. She's a... He couldn't find the word. He landed on the only thing he had, contempt. She's just accounting, he snapped. I sat very still, listening to him reduce the function that kept the company solvent to an insult. It wasn't offensive. It was informative. Catherine said, Grayson, you will resign effective immediately. You will sign the repayment agreement for $2 million, payable within 30 days, secured by personal assets. You will also sign an acknowledgement of improper use of company funds. Grayson screamed. Not yelled. Screamed. You can't do that, he shouted. That's my dad's company. You can't take my life over $2 million. Catherine's voice didn't change. $2 million is not a rounding error. It's a breach. Daniel's voice finally broke through, low and shaking. Grayson. Sign it. There was a long, messy silence, punctuated by Grayson's uneven breathing. Then, small and thin, Dad, please. Daniel didn't soften. Sign it. The following afternoon, Grayson signed. He resigned. And Kestrel Ridge disclosed the incident to regulators as required, under Council's guidance, because once you see a potential PHI issue, you don't get to unsee it. We engaged an external audit firm, Hargrove and Pell, for a forensic review that cost $310,000. We also implemented a controls overhaul in 21 days. The financial impact was brutal, and it was exact. $2,013,600 in improper innovation spend identified. $2 million repayment agreement executed, with $1,250,000 received within 30 days, $750,000 structured over 6 months. $310,000 external forensic audit cost. $180,000 additional legal fees. $3,260,000 reimbursement delays due to clearinghouse suspension impact, recovered over the next 45 days. $0 lost from Brightwell RX because we met their 5-day ultimatum and they renewed under stricter controls. Total immediate disruption cost, $5,763,600. Total funds recovered, $2 million. And the number that mattered to the board, we kept Brightwell, a $9.6 million annual contract, because we demonstrated adult supervision before they had to find it elsewhere. Supporting characters didn't get fairy tale endings. They got real ones. Brent was placed on administrative leave, then formally terminated for control failures. His severance was reduced under the for cause clause. He tried to argue it. Rebecca didn't blink. Sam Ortega got a direct line to finance and a formal vendor onboarding veto. He started sleeping again. Nadia Patel was promoted to VP of Compliance and given budget for actual tools instead of motivational posters. Lila Chin got a raise and a new title, Manager of Financial Controls, and she texted me the day it was announced. I will now be insufferable. I replied, finally. 6 months later, I wasn't interim anything. Catherine called me into Glass House on a Thursday morning when the sun made the table look like polished ice. Daniel wasn't there. That, by itself, told me the board had finally separated the company from the family. Catherine folded her hands. Mara, we'd like to make your role permanent. CFO, I said, not a question. Yes, she said. Base salary $265,000. Bonus target 35%. Long-term incentive grant valued at $420,000 over 4 years. I didn't react outwardly. I just felt the quiet weight of it. Not triumph. Validation. Conditions. I asked. Catherine's mouth twitched slightly. Of course. Controls independence, I said. Audit committee access. No exceptions for innovation. And any new initiative over $500,000 requires procurement onboarding and compliance review. Agreed, Catherine said. I signed. My work changed after that. Not in a glamorous way. In a structural way. I implemented a formal innovation spend protocol. Every innovation expense required a purchase order, a statement of work, deliverables, and a named internal owner who wasn't related to anyone in leadership. We instituted quarterly vendor audits and a bank signatory model that required 2 independent approvals for any transfer over $50,000. We added a related party disclosure requirement for any vendor engagement. If your cousin, friend, roommate, or dog walker owned the LLC, we would know. We also rebuilt trust with Brightwell. I personally signed their controls attestation letter and gave their risk team a quarterly walkthrough of our spend governance. They didn't need charm. They needed predictability. And my personal life, quietly, stubbornly, expanded. I took weekends. I took my sister to dinner without checking my email. I stopped carrying a blazer in my car, not because emergencies stopped happening, but because I finally wasn't the only person capable of handling them. As for Grayson, his personal AI startup, because yes, he tried anyway, lasted 11 months. It's hard to run a company when you've never had to deliver anything without someone else's money and someone else's stuff. Investors don't fund vibes for long, and optionalities don't pay cloud bills. He posted on LinkedIn about lessons learned and the resilience journey. Comments were supportive because the internet is polite to people with familiar last names. I didn't comment. Daniel remained CEO for another year, then stepped down to focus on family, which was a sentence that meant several people had forced him to look at what his family did to the company. Catherine stayed board chair. Rebecca Lynn stayed our outside counsel. And I learned, in a very practical way, that power respects documentation more than it respects charisma. If you've ever felt that cold, disorienting moment where you realize the rules only apply to some people, where you watch someone with the right last name treat your work like a piggy bank, I hope this shows that standing your ground works. I share workplace strategies and corporate analysis every week that help you navigate professional betrayal. Like and subscribe if you found value here. Remember, when someone tells you it's just accounting, what they really mean is they were counting on you not counting back.